Syndicate Bank will be merging with Canara Bank to create the fourth largest PSU bank in India. Let's discuss the merger synergies arising out of the same with Mrityunjay Mahapatra, the MD and CEO of Syndicate Bank. Sir, hi. So in your case, it's being considered as one of the best combinations purely because of the geographical advantage that will come in because of the overlap of the branches or being in the same geographies, basically. So could you talk to us more about the same? How will it impact the cost to income ratio for the merged entity because of this? And also aside of that, will you need to rationalize the branches and the ATM network post the merger?
First thing is that small correction. It is not purely because of the geographical synergy. We are strong in a few geographies. For example, if you take the branch network, we are higher network in UP, higher network in Andhra, higher network in Telangana, higher network in some of the eastern states, and of course, Canara Bank has higher network in a few other states. But the more important synergy is, of course, the technological synergy. Syndicate Bank was the first to take up the core banking in the Indian PSB segment. Now we are in a higher version of iFlex, which is the FlexCube, which is the core banking solution which Canara Bank is using. The synergy will be that since we have gone to a higher version, they don't have to spend more. So the cost control is obvious because the internal team which is there in Syndicate Bank has already learned what are the problems in such a migration. And so the migration of the all 10,000 branches is not just the 3,000 branches that we have planned to do by October. We will now, enlarge this scope. Third thing is the pricing power. Because the schemes have been formulated in such a way, if you look at, going forward, both the banks put together in Karnataka, for example, will have 1,800, more than 1,800 offices, which will be even more than State Bank of India. So in a few geographies, like UP, for example, both of us put together will have more than 1,500 branches. Again, probably one of the largest that any bank has. So the pricing power, because there'll be unnecessary competition will be avoided. That will also be one of the factors which will come into play. Third thing is that in many of the large loans now with the combined entity, and as you rightly told, this is touted as the best merger amongst the four mergers that has been announced, because both the banks have low net NPA ratio. Our capital adequacy was nearly 14%, and they had 11, so combined entity will be 12.5. Again, one of the highest. So net, apart from geographical and cultural synergies, I think synergy gains will be maximum because of many other factors.
So while these synergies will come into effect, we hope that they do come into effect, but one of the major issues is that even for the combined entity, some of the metrics still look weak. If you look at the CASA ratio, the one for combined entity will be about 30%. The provisioning coverage ratio will still be about 44%. So what's your thought process on that?
See, two questions. One is the CASA ratio. I think CASA ratio, what has been announced was as in March, and we have moved to a 4% higher CASA ratio as on June. And CASA accretion, because we will gradually move into better CASA pricing, depending on, because the repo-linked deposit rate will be implemented. So it will not be that a fixed 4% or a 5% or something like that. Depending on market penetration strategy, we can always price CASA in a different way and see how we can do that. CASA, of course, will be a focus of the combined entity. You also told about the provision coverage ratio. I think provision coverage ratio, what has been released as part of the finance minister's presentation, is post the prudential write-off. The prudential write-offs are 100% provided. So if you take them into account, see, 100% provided in those. So in that case, the provision coverage ratio will be well above 70%.
Okay. Sir, as per some earlier reports, you yourself were asking for funds from the government. So even though Canara Bank has got, but I believe that you haven't got fund infusion in this round. So would you be raising some funds till the time the merger process takes effect?
Now this I'll take a call a little later, because currently, as I told, our capital adequacy is well above 14%. So that means we have enough growth capital as of now. And the 6,500 crore, if you look at the 55,000 crore allocation that has been made by the finance minister, it has not been made to any of the merging banks, but to the anchor banks only it has been made, so that in due course those will be utilized for the total entity.
So, sir, what do you expect? How much time will it take for the merger process to take effect? And till that time, what will be the targets or the roadmap for Syndicate Bank individually? Because in Q1, you had a loss of about 980 crores. So, in next couple of months, let's say next 4 quarters, what would you be targeting at?
Our aim in the first quarter was to clean the balance sheet and bring the net NPA ratio below 6%, because unlike many other banks, including some of the leading public sector banks who decided to stay above 6%, we wanted to bring the gross NPA came down well below 12%, 11.37%, and net NPA was 5.9%. So that was the aim. That is why we provided aggressively and declared a loss. But going forward, the plan is to stay business as usual till the cutoff date is there. And typically, these kind of mergers takes between 6 to 9 months for a cutoff date. Till that time, these will be independent entities. And we want to, unlike in the past, for example, if you look at State Bank of India's merger with associate banks or with Bharatiya Mahila Bank, very small entities were merged with large entities. And a story which was similar played out also in case of Dena Bank and Vijaya Bank merging. A 1,600, 1,800 branch kind of a bank was getting merged with a 7,000 or 8,000 branch network. In this case, we have 4,200. They have around 6,500. So it is like a merger of equals, which is going to happen. So this will play out a little more evenly. And I think the strengths that are there, because the origin of both the banks are from the same area. The culture of the head office and the culture of the core senior management team is of similar. I think, as I told, the synergy gains will be much better as compared to any past experience of PSB mergers.
All right, Mr. Mahapatra, thank you so much for joining us, and good luck for the merger process, sir.
Thank you very much. Thank you.